What's up guys, Patrick here, and today we're going to be discussing about the 5-minute 3-bar reversal pattern, and we are going to combine it with the 100 tick chart. So what are the components? We are going to be using the 5-minute time frame for the pattern to occur, but note, price is fractal, so what you can see on the 5-minute time frame, you can also apply it on the 15 minutes, the 30 minutes, the hourly, and so on and so forth. This could either signify or signal us for a pullback entry or a possible reversal. So we are keen to look at this pattern on points of interest. Examples of points of interest are higher time frame high or lows or session high or lows. So one example of that is if we are on the 1 hour time frame, and if price is approaching the high or the low of the previous 1 hour candle, we go down to the 5-minute time frame and we look for the pattern to occur. It can also be that we are gonna look for higher time frame fair value gaps, inversion fair value gaps, breaker blocks, order blocks, that price is approaching those points of interest, and we are going to look for the pattern to occur. So these are ICT concepts that we are going to be discussing on future videos. So let's look at the bullish 3-bar reversal pattern. I would like you guys to look at the picture on the right or the illustration on the right. So the pattern will happen first with a big bearish candle. As you can see here on the number 1, there's a big red candle, a bearish candle. It is followed by a doji or an inside bar candle. So what's an inside bar candle? Just focus on the illustration above. This number 2 is an example of an inside bar candle because when you look at the first candle, the low of it is not taken out by the second candle. It just closed within the first candle. So you can see on the illustration below, the first candle's low is taken out by this second candle by this wick, and then it closed inside the first candle. And to complete the pattern, so we are going to have the number 3 candle, which is a green engulfing candle, which engulfed the first and the second candle, signifying that bulls are in play, or bulls wants to push the price higher. And take note, a close within the first candle or the first red candle gives a higher signal or confirmation, because there are instances that price is gonna move above the first candle and then close below it. The probability is lower in those kinds of instances because there will be a chance or chances that the price is just gonna continue to move down. If this low is taken out or this low is taken out and close below it, chances are price is gonna move further downward. Or if it wicks above and then close below, it might just consolidate further and we might get chopped out. So if we are looking at the bearish 3-bar reversal pattern, so we can see that there's a big bullish candle, signifying by the number 1. followed by a doji and an inside bar candle, and then followed by a red engulfing candle. And again, take note, a close below the first green candle gives us the confirmation or a strong signal. So what's up, guys? So we are gonna have an example of a bearish three-bar reversal pattern. But first, I want to take your attention and focus on the left chart. Currently, we are on ES hourly time frame, and on the right, we are on the 5 minute here time frame. So let's focus first on the hourly time frame. So we can see that we have this low, a major low for me on the hourly, right? I also have this low here and this low, right? So as we can see, we can also delete this. We have this displacement move there, right? We have this displacement move breaking this hourly low, signifying that we are bearish on the higher time frame, and there's a high selling pressure on the higher time frame. Sellers are in play. Sellers want to push the price down. So what did price do upon breaking this 1 hour low? It retested this area, and automatically we can see that sellers push the price down with this red candle, right? So it means that sellers are interested in entering in this area to move the price down. So upon retesting this low, you can see that it made a lower high here, and it broke structure here with this red candle. As you can see, it's still aggressive. It's a big red candle breaking this structure here, and before it broke structure, it gave us a lower high. So it is crystal clear that we are bearish on the hourly time frame, right? Making bearish structure, lower high, lower lows. And I want to get their attention and focus on this candle here. This blue candle here. This is a bearish order block. We're gonna be discussing it on further videos. So this is a bearish order block, and price is currently tapping in this area. So moving forward, lower time frame, 30 minutes, right? So we are currently in a 30-minute fair value gap, right? This area. So that's clear. Stocking confluences here. We are bearish on the hourly time frame, tapping on the hourly order block, and currently on a 30-minute fair value gap, which is bearish, right? So let's move time frame lower to the 5 minute. So we're gonna be looking for our pattern to occur so that we can enter the trade or be with the trend, right? Enter the trade or be with the trend, right? So as you can see, I'm focusing on the 5 minute. I'm looking at it now, and I can see that we have this 5 minute fair value gap here, which is untapped. Our price haven't gone through it yet. Also above that is the same fair value gap that's untapped. And price is currently making higher highs, higher lows, higher highs, right? Since it made this low. So in the 5 minute time frame, we are bullish, but in mind, I'm thinking bearish because of the higher time frame confluences that it is showing. So I'm waiting for this 5 minute bullish trend to be over so that I will be or I would enter with the trend. So let's move forward. What is price doing? It is making a low there, right? So it made a higher high still. But what did price do there? It gave us a doji and tapping into a 5 minute fair value gap. So that's very important, taking into consideration points of interest, confluences, right? So it tapped into a fair value gap. It also took this high here, right? So there's a lot of confluences that are we are seeing here. And then what is price doing after that? So I want to focus on your attention on this pattern, right? This is the pattern that we are discussing earlier, a three bar reversal pattern, right? So we can see that we have this blue candle here followed by a doji and then a engulfing candle closing above this or closing below this low, right? So that's our signal for us to enter short below this candle. Our invalidation point is here, right? So I'm not going to be discussing about risk management here. So it's very important to have risk management and proper positioning or size position here. Don't over leverage. Depends on what size your account is, right? So our take profit depends on you. If you want to take your profit here on this fair value gap here or this imbalance, you can take a partial there. Let's say you can um, take profit there or this low. It depends on you, right? As long as you manage your position properly. So let's move forward. So we are currently on the trade. Remember, we have this invalidation point here. When price breaks this, then our trade idea is invalid because it's making a bullish pattern and we are bearish, right? But take in mind the higher time frame is giving us a signal that we are bearish. Lower lows, breaking 1 hour uh, structure, right? So we can see we have a follow through there, right? So price is retracing again. We have this bullish candle forming, but take note, invalidation point. See, we just retested this area and automatically we have this bearish candle forming, right? So you can see we are failing to displace in this area, right? But we're still making, before we are making higher highs, right? Now we are making lower. This is the high and we're making lower high, right? Still, see, we failed to break it. We tapped into it, sort of break it, but did not displace, right? Did not displace. That's very important. It's not displacing. We still have the integrity of our invalidation point, right? What did the price do? What is the price doing? Right? So price is still lingering there, right? Then eventually it's moving down to our take profit area and further, right? So that was the trade, but my main focus there is this pattern here, right? That we were talking about. So mind you guys, this pattern is not perfect. Sometimes you can see what I'm saying here, that we have this candle and this engulfing pattern here, but sometimes it's not going to be perfect like this. Sometimes we have like a small candle here, right? And then it breaks this and then continues further. It's still a reversal pattern, but ideally, if you see this and stacked up with a lot of confluences, so it's just a matter of time for you for price to um, further go down in this case. Okay, so we're gonna take the same example for our bearish 3-bar reversal pattern, and we are gonna combine it with the 100 tick chart. I really like to use the 100 tick chart to further exploit my risk to reward ratio, right? But take note, the lower time frame you go, the noisier it will get. So it's very crucial to have a higher time frame, bigger picture first before moving lower. So we're gonna look at the 1 hour again. Very quick review. We had that 1 hour low broken by the displacement move, knowing that okay, sellers are in play, retested that low, and then made another lower low with this structure. Upon retesting that, upon making that lower low, we were making a lower high here, signaling that we are making a bearish structure. We are on a bearish trend on the hourly time frame. So I was keen on pointing out that currently the price was tapping inside the hourly fair value hourly order block, right? So this is important because this is a point of interest that we're looking for, thinking that sellers might be interested to enter on this area. So if we move a time frame lower, so we are on the 30-minute time frame, where is price currently? On a 30-minute fair value gap. 30-minute bearish fair value gap. So we're considering here that the 30-minute sellers might enter the market here. So if we move further on, let's say maybe the 15-minute time frame, price is also tapping in a 15-minute fair value gap, bearish fair value gap as well. So there's a lot of confluences that we are stocking at the moment here, right? So if we move further to the 5 minutes before moving to the micro time frame, okay? So as we said earlier, we are looking at the fair value gap here that is untapped, right? As well as this fair value gap on top, right? So we are now on the 5 minute time frame, reviewing things and possibly going a micro time frame lower, keeping in mind that okay, 1 hour, 30-minute time frame, 15-minute time frame are bearish. So we can also see here, we can discuss this in further video, a 5 minute breaker block here, this area. So it's very interesting for the bears here. There are a lot of areas for us to think that, okay, is this the area where, or is these the points of interest where sellers are going to enter, right? So we are patient here because upon reviewing the 5 minute, it is making a bullish structure after making this low, right? Higher highs and higher lows here, right? Also take note, when we are moving on the micro time frame, the 5 minute is bullish. So we're not going to short yet because we have to synchronize the lower time frame, the 5 minute time frame, to the 30 minute, the 15 minute, and the hourly time frame narrative. So if you can see the 5 minute structure, we have also a bullish order block here by this red candle. So it's very important. As well as we have a displacement move. So it's very important to take this into consideration that we are having a displacement on the 5 minute time frame, meaning we have momentum here. So with that in mind, I'm thinking, okay, I'm gonna short, I'm gonna go a lower time frame, but I'm gonna be careful because there's still momentum on the bullish side of things. So for me, when I go on the higher 100 tick chart, it's sort of a scalping strategy. I'm not gonna hold the trade too long. It's just more on a enter the trade, and when I am on profit, get out of the trade. Base hits for me, and then move on. Or I can just maybe scalp on the 100 tick chart and look at the 5 minute for a possible entry there to hold longer, right? Maybe I'm gonna enter one mini on the 100 tick chart with a tighter stop loss, get the profit there, and then move on the 5 minute, move from a mini to micros, maybe 5 micro or 3 micros, have a wider stop loss, right? And a wider take profit, sinking in with the higher time frame. So that's what is playing on my mind here, right? So we are on the 5 minutes of the moment. So let's go on through the lens of the micro time frame, right? So let's focus on here on the right. So I'm looking at this 5 minute fair value gap here as price is tapping towards it. So this was the 5 minute. This was the 5 minute candle, the doji candle that we are seeing here, right? This was when we talk about earlier before the pattern came into fruition, right? Let's highlight it further. When we were looking at the 5 minute, right? Take note the pattern hasn't been built yet here. But we were talking earlier on the 5 minute time frame that this was the point of invalidation, right? So I'm looking at it on the 100 tick chart. If we, let's say for example, if we broke this, right? So we're still making higher highs and higher lows, right? So we are still bullish at that point. But as you can see on the micro time frame, we're making bearish structure already here, right? So for me, if I'm interested to enter here, because price was tapping on to a point of interest, specifically this 5 minute fair value gap, and it gave me a doji when it closed. So as you can see, the structure of the doji is making higher highs and higher lows, right? If you can see on the microstructure here, it's sort of displacing with this move, right? Sort of displacing there. And it retested that area. You can see it's also considered as a micro time frame order block. It's very funny to look at it in the micro lens because it's very fractal. What you can see on the higher time frame, you can see as well on the smaller time frame, even the micro time frame. So for me, this is for an aggressive, right? So for me, I'm thinking, okay, this is the area to look at. If price breaks this, we're gonna move further up. But if price displays below this candle, then a pattern might occur. Then maybe a 3-bar reversal pattern might occur. And if price breaks and close below this candle, then it's a confirmed 3-bar reversal pattern. So it's very keen that you have to be observant, right? To those kinds of scenarios. So what you can do is you can enter short here, right? Anticipating This is sort of aggressive. You can enter short there, anticipating that we are gonna have or gonna build a 3-bar reversal pattern, right? So my risk management strategy there is I have a different ATM strategy on ES and on the Nasdaq. So because ES is moving a little bit slower compared to the Nasdaq, so I have a 20 tick stop loss on the ES and a 24 tick stop loss on or take profit. So meaning a max loss of sort of 250 and a max profit of 300 here. So I'm scalping here, right? So this is a case-to-case basis. I can adjust this accordingly. I can trail this accordingly, right? So when you are scalping, this is the 100 tick chart. We don't need to be greedy here, right? We take into consideration this displacement move here on the 5-minute, that this might be an area of resistance, as well as this bearish or bullish fair value gap here. We will take into consideration that price is going to move towards that area, right? So we can adjust. We are currently our take profit on this low, right? So this is the safer route. This is an area to consider as well, right? That this is the lowest hanging fruit. We know already from the review that price is gonna move lower, but I'm just gonna show to you how to exploit the 100 tick chart, right? So for me, this is the entry model. I want the candle to close below this, and to confirm the 3-bar reversal, a candle to close strong below this structure, right? I'm gonna risk 250 to gain 300 here. If you are sort of adventurous, you can move it further, right? But the bigger take profit you have, the higher the chance that you are gonna be stopped out. There we are waiting here. As you can see, the 100 tick chart. So we are on the trade now. Are on the trade 1 mini ES. So I'm the moment when I'm entering here, I'm sort of looking at this structure. I am thinking, okay, this structure should hold its integrity. Price should not displace above this, right? Price should not move above this. When it displays and move here, maybe this area here should be taken out, and maybe we're gonna fully fill this 5-minute fair value gap. So this area for me now is crucial. So if you are very conservative, that area should, when price displays above that, I'm out. So I'm gonna be losing at least $180 right there, right? As you can see, price is not moving below it or above it, and it's just further moving down. So you can see on the 5-minute, the 3-bar reversal pattern is slowly forming. So that this is the low that we were thinking. This is the candle's low, 5-minute low, that price should close strong below it to have a confirmation, right? that the 3-bar reversal is in play. So price is still making structure. Lower low structure, right? It's not making a bullish structure there. It's just bearish on the micro time frame, right? See, let's see. Let's extend this just to see further my mindset there upon the thinking. So as of the moment, we can see that the pattern has already uh, was put in play, right? This is the pattern already. So I'm confident that in this area, I'm confident that we are bearish on the 5 minute because we closed below this uh, area. But I was taking into consideration this fair value gap that price is gonna move and might fill that fair value gap, right? Let's see. So here we are now building sort of a bullish pattern. So we have to be, if you're in the trade, to just be aware of it, right? Higher highs and higher lows. But we are already having a confirmation here on the 5 minute bearish, right? But look at it, be keen, maybe move your stop loss further, lessen it. 100. Cut the losers short, right? See, still making a bullish structure. And now we are making sort of a bearish structure if you are considering this high. But still, you have to break these lows. Yeah, now we are breaking. Now we broke this low, right? So as you can see, so you can take this high here or your structure to move your stop loss, right? So you can trail there. So we have to displace below this and go to that fair value gap. See, so we see just sellers present. It's not making higher highs or higher lows at the moment, right? It's just displacing below it. Yeah. So we can move it further. Right. So that was the example that I'm showing you to further exploit the 100 tick chart. So mind you guys, this is just an exercise, an example. Most of the time, the market is not perfect. It's gonna play with your emotions. It's gonna play with your mind, right? But we are having just sort of a picture of what price is doing. right? Based upon the pattern that we were thinking. So another thing that I will point out, first we're just gonna move away from the 100 tick chart and uh, go back to the 5 minute structure first, right? So we were saying earlier that we are taking into consideration this displacement move, right? On the 5 minute, we were looking at this area here as the 5 minute order block, right? This was the invalidation point for us for the 5 minute 3 bar reversal pattern, right? But what I failed to discuss to you is that if you see the pattern here, what stands out in that pattern? Huh? What stands out on this pattern? You can also see a 5 minute fair value gap there within our pattern. So we can also take into consideration this area as a point of interest. If the bearish higher time frame structure holds true, this area should be respected. That sellers is still going to be present on this area, right? We move forward so we can see some big follow through there, right? Right into our order block, right? We're looking at this low. We're taking into consideration the structure as well as the move, as well as if there's displacement on this area. So if we are gonna move further down, price should displace below this low and further downwards with momentum, right? So as you can see, right, it tapped into the 5 minute order block, as well as we see sort of what kind of pattern. What kind of pattern is this? This might be a possible bullish 3 bar reversal pattern right there. Interesting, right? Very interesting. So we can see here that this is not like, this is what I'm saying earlier, that price is not perfect, right? We may see that price with our pattern, right? We are hoping that we're gonna see after this inside bar a engulfing candle, right? That price is gonna take this red candles high, but it didn't. But upon closing above this low, that's sort of the confirmation that price is gonna further move to further push the price up. So as of the moment, price is now tapping into that 5-minute fair value gap within our pattern here, within the 3-bar reversal pattern that I was discussing earlier. Before the 3-bar reversal pattern was formed, it tapped into this point of interest, this 5-minute fair value gap again. So if this bearish trend holds true, this fair value gap should be respected, right? That's common sense. So what you can do is you can also enter short here, right? Short. That's just for an example's sake. Let's just adjust our take profit, right? So we can also, this is an aggressive sort of example. So what you can do is you can go a time frame lower, like the 1 minute or the 100 tick chart, and look for bearish structure to form and then enter on it, right? But let's take this 5-minute just for an example. Stop loss above this candles, 5-minute candles high here, right? Stop loss above there. Thinking that if price moves above it, we're out, and maybe price is gonna take our invalidation point and further fill these 5-minute gaps above. So we're on the trade right now, right? So as you can see, it's respecting this 5-minute fair value gap, right? Like what we said earlier, if the bearish trend holds true, it should respect this 5-minute fair value gap, right? See, again, going back to the bullish trend, we are also observing as well what is price doing. We don't just expect that price is gonna go down, right? Price is gonna play around on certain areas, especially when we see that there is a point of interest, specifically this uh, order block here, plus this displacement here. That's very, very important, right? Also, we have a higher low after building this low here, a higher low and still a higher high here, right? So technically the bears or bulls are still intact here. And if you come to think about this, this is also a higher low here compared to this low, right? So we are analyzing the situation upon seeing what the chart is or the market is showing us. So we are looking for, if we're bearish, looking for displacement against these lows to confirm that we are bearish, right? It should displace, it should move down with strength, with momentum, and then follow through, right? As we can see here, there's wicks forming on this order block, right? 1, 2, 3, 4 wicks. Still another wick, right? It took out this high, so but failed to displace upon this high. So I'm thinking if we break this, right, most likely we're gonna move higher, right? So if you are on a short here, you can either put your stop loss there, right? Or take a stop loss there, protecting your profit already, right? Knowing that we didn't displace below these lows, and we are seeing wicks within a point of interest. So most likely if we break this candle, we're gonna move higher, right? That's just an example. So yeah, we broke that low. For example, we were out right on that scenario, but I moved my stop loss again above this high, right? Just to hold our trade intact. Now, I want you to point out another structure that was or another point of interest that was formed here. This is a volume imbalance here. Can discuss this further in another video, right? This is a volume imbalance. That is also a point of interest. This is also going to be a magnet for price to go through or go to. See, it went there. But one thing that I want you to think is that price took this high, tapped again our fair value gap. But what did the fair value gap do? Right, it pushed the price down. It was still holding its it's still holding support in this area, holding true to the bigger bearish picture. See, now we broke below that um, volume imbalance, and let's observe what is price doing here. Now that volume imbalance is turning to be resistance, right? So we sort of break this low, right? But there's no displacement move or strong move there. Moment, right? So we have smaller candles there. Now we're making a lower high compared to that high and still breaking this low, right? So see, now we're still making another lower low there, not breaking that high. Now, see, candles. Yeah. Now there's the displacement move that we're looking for. So most likely these lows are gonna be taken out. Yeah. So that was the example. So if you find this video informative, and if you find value on these kinds of videos, I really like you to like and subscribe, and see you until the next video.